Today on Forbes, India's richest man adds Fizz to country's cola market with relaunch of iconic brand. India's cola wars are bubbling over with the revival of homegrown brand Campa Cola by Reliance Consumer Products, a unit of Mukesh Ambani's Reliance Industries. Since acquiring the brand 3 years ago, Reliance Consumer, overseen by his daughter Isha, has followed its playbook of aggressive pricing to shake up the country's soft drinks market, which has long been dominated by the Coca-Cola Company and PepsiCo. Campa sells 200 milliliter bottles for 10 rupees, or the equivalent of 12 cents, about half the retail price of 250 milliliter bottles from the American giants. At the annual shareholders meeting in August, Ambani disclosed, quote, "Campa Cola now holds double-digit market share across many states, breaking a 30-year multinational duopoly." The frothy competition poses a challenge to India's cola king, Ravi Jaipuria, whose Varun Beverages is PepsiCo's second-largest bottler outside the US. In an earnings conference call in July, he acknowledged, quote, "Of course, competition is there. However, they will get their share and we will get ours." While nearly 3/4 of the company's 126 billion rupees in revenue, or about $1.4 billion US, comes from India, where it has 36 bottling plants, Varun Beverages is looking overseas for growth. In 2024, it inked deals to acquire PepsiCo's businesses in Tanzania and Ghana to add to its 13-country-strong portfolio. Despite these moves, the stock is down 22% from a year ago, resulting in a $4 billion drop in Jaipuria's net worth to $13.3 billion. Another deep-pocketed player has entered the fray. Billionaire brothers Shyam and Hari Bhartia's Jubilant Bhartia Group, which owns the Indian franchises for Domino's Pizza and Dunkin' Donuts, picked up a 40% stake in Hindustan Coca-Cola Holdings, parent company of the largest Coca-Cola-owned bottling unit in India. In December, when announcing the deal, which was valued at 125 billion rupees, the brothers said, quote, "This investment underscores our belief in the significant long-term growth potential of India's F&B sector." The Bhartias and Coca-Cola are reportedly aiming to eventually list the business. Campa Cola, first introduced in 1977 as, quote, "the great Indian taste," along with local rival Thumbs Up, became household names in the wake of Coca-Cola's exit from the country over restrictions on ownership. But Campa's sales waned after rules were eased, and the market reopened, allowing Coca-Cola to snap up Thumbs Up and stage its return. Reliance is taking Campa overseas, to the UAE and Nepal, the latter with the Chowdhury Group, controlled by billionaire Banad Chowdhury. Nearly 2/3 of those on Forbes Asia's 2025 India Rich List are less well off this year. The collective wealth of India's 100 richest is down $100 billion. Among those who lost money is India's richest person, Mukesh Ambani, who serves as chairman and managing director of oil-to-telecoms behemoth Reliance Industries. His net worth declined by 12%, or $14.5 billion, though he remains a centibillionaire with a fortune that stands at $105 billion. Ambani, who jumped into AI by setting up Reliance Intelligence, said he plans to list telecoms unit Jio in 2026. India's hopes of being on friendly terms with Trump 2.0 were dashed when the US slapped 50% tariffs on the country. To soften the blow, the Indian government announced sweeping reductions in the goods and services tax in September to boost consumption by making a range of items, including cars, cheaper. But a weaker rupee and a 3% decline in the benchmark Sensex since Forbes last measured fortunes resulted in a 9% erosion in combined wealth to $1 trillion. For full coverage, and to see the India Rich List 2025 published last week, check out Yasar Rosendar's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.